Hi, everyone, and welcome to another live trading series. Something a little different today. I'm going to be doing a book review. Apologies, I don't have my studio set up. Right now, it's just in a corner. My kitchen's behind here. I have my little, where is it? What is this? My little Shake Pay pill, my little Shake Pay mug. It matches my new keyboard, but that's maybe for another video. Okay, I'm going to be doing a book review. So I've been spending a few weeks reading some books about options trading. Hopefully, I was thinking maybe I can do some research, maybe create a course on it because people have been asking for a course because my trading videos are a little too complicated. So I spent a few weeks reading these, and one other one I did an audio, no, not an audiobook. What is it? Like a virtual, like an ebook. And I can't recommend any of these. I feel like it was a waste. I was hoping to actually learn something. This one reviewed by and foreword by Tom Sosnoff of Tasty Trade. I have a lot of issues, or maybe just it's 200 pages. 100 pages could be removed. Very math heavy, not really relevant, I feel. This book, don't recommend to a single person. It's a journalist. I'm not even an options trader or someone in finance. Created a really weird and a fake trading strategy. It involves, long story short, 200 pages. It involves opening up a paper trading account, which you can do on Interactive Brokers if you use my link. Paper trading account at 9:30 a.m. Okay, or when the market opens, depending on your time zone. Find stocks that are up 1% and buy 5 paper options on them, calls. And then if they keep going up, if your options go up, buy another 5 in your paper account. And if they keep going up, you've identified winners. And then buy 5 real options in your real account with real money. So you bought 5 paper options at 9:30, let's say 5 paper options at 10. And then at 10:30, you buy real options. I don't see the point. I don't think he knows what he's talking about. Do not recommend this at all. Waste of time, 200 pages wasted. All right. On to this one. The Lucky Investor's Guide to Options Trading by Julia Spina, foreword by Tom Sosnoff. This is pretty much the Tasty Trade strategy of SPY Strangles. Everything they tell you in here is that trading options will lose you money. Chances are trading options will lose you money. They back-tested a lot of strategies. I know backtesting, it's the only thing we can do for a strategy, but it doesn't take into account market conditions and human emotions and closing early and trading early. It basically says everything that Tasty Trade has already said. Open 45-day to expiration strangles, and then manage them at 21 days to expiration. I tried doing that on SPY. I'll show you what has happened. I actually did make money today. Yesterday, I was gonna do this book review video yesterday, and I was losing money. But then today, something happened with the market, or just theta decay, or maybe gamma worked my way. I ended up making money, so I could just review on some of my strategies. But maybe I'll show snippets here of difficult parts of the book. Difficult, I mean, in terms of the math involved and the calculus. I understand math is an important part, but I don't think anyone sits down and calculates their options, the Black-Scholes model. I get it, but no one sits around and does that for an options book. Hold on. So I'm going to try to find you a difficult. It's just a lot of charts here, a lot of charts. I'm not really getting it. All right, so I'll put this picture up. I don't know if you could see it. Of just a bunch of numbers. I don't really think it's relevant, but I'm having trouble recommending this book. It assumes you already know options. It's a little more math heavy. If you're an engineer or a math major, I guess this would help you, but I'm really struggling. I don't know, just for an options beginner or someone who wasn't in finance, it is very difficult. It's saying an approachable guide to sustainable investing, minimal luck needed. But everything they're saying, they're this strategy, back-tested, will lose you money. And if you were trading this in December 2018, when the market tanked, you would have lost money. March 2020, if you're doing the strategy, might have wiped out your portfolio if you didn't manage it. So very hard to recommend. I know there's not much of a video. I'm supposed to be recommending books to read to help you, but I just spent a month reading 600 pages of these books. and I can't find anything to recommend. I don't think they're that good. I wanted something more recent because I don't think a trading book is good unless it incorporates what happened during the pandemic, like the March 2020 flash crash. I don't like, down 40% and then back up to new all-time highs. It's hard to teach someone about trading and emotions and what could happen unless you incorporate March 2020, which is why I wanted this book. It was recommended to me by a Discord subscriber. If you're interested, I have a Discord server. I'll leave a link to the Patreon. It's $5 a month. You join via Patreon and it'll link to Discord. There's 93 people or 94 people there right now. I'm going to show you some of the strategies I implemented from this. If we jump right into Questrade, I'll show you my SPY Strangles. Let me just isolate it. So I'm losing money on everything else. Thank God. So if we look at SPY Strangles, these expire in 16 days. I should have managed these 5 days ago, but I wanted to do a video on it. So what I did was 15 Delta Strangles. Right now, the Delta here, this says 9.9, this is 3.1, fine. When I first opened them, and I'll show you opening a new one on the left, when I first opened them, they were 15 Delta on each side. And my total profit that I could make, let's say 192 here plus 159. So let's show you what that is. 192 plus 159 times 5 on each. So 1755 total. They're saying to manage at 50% profit or 21 days to expiration. So I didn't hit my 50% profit here. Since SPY is trading in between both of these, I sold a 417 call and a 370 call. SPY has been hovering at in the 390s for a while. So since I opened it a few weeks ago, it was 398, went to 408, down to 382. So like my call side's been making money, my put side's been making money, and now it's kind of back in the middle. Everything's decaying. They're saying you should close it when it gets to 15 days to expiration because of gamma. Gamma is just like the speed at which the delta changes. So the options contracts, the profit or losses move more for less movement in the underlying, if that makes sense. I'm bad at explaining. I'm very bad at explaining. So you're not dealing with as much theta decay. The closer you get to expiration, you're dealing with more gamma. As each dollar of SPY increases, the more the option contract will vary. So, I'm actually like, what is this? Like 75% profitable on the call side. So I might close both of these out. I am going to sell another one. To be honest, within 15, 16 days, I do think both of these will be 100% profitable. So I could make another $800 here, but why not just close it out and roll another one further out in the money, I guess, or further out of the money, and just see how much we can make. I might go riskier. Do I do like 6 contracts just to make a little bit more money? But we can kind of see and play around with the deltas there. Again, I haven't downloaded the trader workstation yet, but if you're interested in doing it in what is this? Interactive brokers. So again, like I don't like the way this layout is, but it's what I've been using recently just to learn how to use interactive brokers. You click on SPY. I don't really care about the day trading over here because this is from what is this? Trading View. So you can just go to the options chain and they have the dates over here. So I like that it shows you the dates to expiration actually. So you can see they want you to select 45 days to expiration, which we don't have available, which is weird. So I could choose 38. And then they want you to choose the 15 delta. So you can go, is it not loading? Okay, maybe my computer is just slow, but you can see the closest to 15 delta would be 368, and I'll be earning 267 for this contract. So you can open this one, and on the call side, you can look for also 15 delta, which would be 415, I believe. Oh, further out, wow. 420, that's funny. Oh, and you can sell. And you can place this order for 270 total. If you want to do it in Questrade, we could pull up the options chain. I have to end this soon. Let's do April 21st. Oh no, it would have to be, let's just do the same, April 28th. I wonder why it doesn't show more. So if we go, where am I? Show more strikes. So calls on the left, puts on the right. You're looking for the 15 delta, which is over here. We'll go to around the 368, I believe. You know what's weird? Why do they show different amounts? Interactive Broker says 368 is a 15 delta, but Questrade says it's 368. So kind of a red flag. I wonder who's more accurate. That is weird. The amounts I earn would be the same, but the delta is different. So I wonder what's up with that. This seems too close to the money, I believe. So if I choose the 6, you know what? Another way to verify, if you go to bar chart, we'll go SPY. Let's check 428. If we go 50 strikes, let's try to find, does it show delta here? Oh, Greeks. So the calls, these ads are annoying. Near the money, 50 strikes. My delta is here. Interesting. So this says 20. Oh, that's for the call side. My mistake. So 15 delta is 420, which is accurate. Where's the puts? These are my puts. Let's look for 15. So it'd be 368. Okay, so it looks like bar chart and interactive brokers have similar deltas. Questrade would have me playing a little riskier. They'd have me at 375. I wonder what's up with that. How did they calculate that? Delta, am I at the same date? Yeah, I'm at the same date. So let's go 365. So here, I have it pulled up here as a strangle, SPY strangle. For the call side, we'll go 365. I have that lined up. For the put side, what did we say here? 420. If we go to Questrade, 420, what does it show? It shows 17. Okay, that's fine. That's close enough. So I can go 420 if I want to make a little bit more money, 415. Do I think SPY could go back to 415 within 30 days? Because April 21st? Yeah, I can. Should I do this? I could probably do 420, earn a little bit less. Is this even worth it? Is this even worth it? Yeah. So what would I be earning? $3 a contract times 5 contracts. I should be $1,500. I could go just market price just to get it filled. Could I go more contracts? I can. I do have the buying power for it, but I could place this trade. $1,500. It's using up $30,000 in buying power. What is my max loss? My max loss on the call side is infinite. If SPY increases, I am short 500 shares. So if SPY goes to 500, I'd go 500 minus 420 times 500 shares. That's a $40,000 loss. So I'd probably close this. I'd probably cover by buying 421 or 422 shares, or I can close out a loss, or I can roll up. My max loss on the put side, it is defined. So it's 365 times 500. Max loss is 182,000. I don't predict or don't expect SPY to go to zero. So this is a theoretical max loss. I don't think this would ever happen. If it does, we have bigger things to worry about than just like my 5 calls. I can manage because I do have the buying power for it. You can see my buying power here. I have a couple 100,000 I can manage with. If this is too risky for you and you want more defined, you can do an iron condor. Iron condor, you can buy like the 430 or 355 for protection. So right now I have unlimited max loss to my upside. 420 if it goes to 500. Obviously I'll lose that. What is it? $80,000. But if I buy a call at 430, that would be my protection. So my max loss is the width between your strikes. So this is undefined risk. If I go defined risk version of a strangle would be an iron condor. So if I buy a 430, obviously I'd be making less money because I'm making 1,500 here, but I have to spend money to buy the call. And how much would that cost? You could see it here. It would cost 52 cents. So instead of 160 per contract, I'd be making, where is it? I'd be making like 110. So let's say your max loss 430 is your protection minus your risky side. So it's $10 per contract, $1,000 because you have to do times 100. And for me, since I have 5, if I did 5 iron condors, my max loss would be 5,000. But I am okay with the risk. I can go undefined because I can manage it. So I will, why isn't this working? I will make the 1510, okay, minus my $12 here. Maybe I can update in a few weeks on how this is doing. So let's sell this. Where is it? Positions. I'm wondering why it didn't get filled. I can probably close this out now. Let it ride. 15 days. I'm not too fussed about this, but I've been wrong before. Is there anything else I'm doing? I know this is supposed to be show you I'm losing money on Coinbase. I'm trying to short Coinbase. This expires in 3 days. I sold 12 contracts and it's not going well. Obviously, I could have made another $2,000 if I just held off a little bit, but this is frustrating. I'll probably add more contracts and roll up, or I'll roll out an additional week. I'm not sure what to do yet. I'm just going to wait 1 or 2 more days to see what happens. Is there anything important I want to show you? I'm trying to short Tesla. It's not going too well. Perfect. Just my luck. What else am I trying to do? I'm doing way too much here. Netflix. This expires in 3 days. I'm not going to manage this. I'm probably going to let this expire. Where is this? So I'm currently losing if I close it now. Netflix is trading at 306 and my call is 320, 340. So I'm going to let this ride. If it gets near 320, I'll probably just roll to another week. I'm probably going to do this again. I've been doing weekly spreads on Netflix for like 9 months and it's been working out pretty well. So I'll just show you an example of what I'll be doing. I'll probably open another one tomorrow or Thursday. So if we look at 330, that might be a little too much. So if I go 335 and 355, I'll probably sell 12 or 15 just to make 1,000 a week. So 335 here, 355 for protection, and I'll probably sell 15 just to make that $1,000. I might do more on Tesla because Tesla's up 6% today. So you want to sell calls or credit spreads on green days. If I show you an example of what I would do right now, I'll sell for next week and I'll probably go 220, 240. I think that's what I've been doing and it's been working out pretty well. 220, yeah. So it'll need a 10% rise within 10 days, which it can happen. I'll go 220, 240 and then sell 12, 13 contracts just to make a couple $1,000. Well, $1,000 in a week and then hopefully do this every week. I think I'm going to end it here. Again, this is supposed to be a book review on these two, but I don't have anything. I can't really recommend them. This one obviously a little better, more math heavy, but it doesn't give me much confidence. Just tells me you'll be losing money if you trade over the long term. This one completely avoid, not good at all. I'll probably do a review on more day trading items. I'll probably read 1 or 2 more books, maybe older ones, like 20 years old, ones that have more proven track record, and we'll just see where we go from there. I think that's it for now. Let me know if you have any questions. Thanks for watching, and tune into the next one.